when you relinquish the ownership of your private keys, you do just that. So crypto assets, most of them are bearer assets, very similar to dollars, okay? And this is not as safe as it could be in my pocket, but you know, I'm a fighter, so it's safe enough. You know, if you come for it, you got to come with a little something extra, right? But if I take my $5 bill and I give it to you, I have relinquished possession, ownership, and custody of that $5 bill. So I have to trust you do the right thing with it.
Right.
Okay?
Right.
So you bring your girlfriend to dinner and you get that extra $5 dessert. What am I to say? I gave it to you.
Right.
Okay, it's my fault.
Right.
So on that note, okay. I did the crypto thing and I regained possession, custody, and control of my assets.
Yeah.
So with crypto being bearer assets, the security portion, most security errors are usually the part of the user. A lot less people lose their capital from hacks on the server, on other people's servers, etc. Most of them do things like make a password called password, which I thought was a joke when I heard it the first time.
Like 30%?
You have to act as if you're paranoid and they're really after you.
Right.
Because you're not paranoid and they are really after you. And the larger your account is, and you could go through a blockchain explorer and see large accounts, the more economic incentive there is for someone to take it. You know, so if it's like 40, 50,000 is one thing, you know, $5 or $6 billion, you know, that's a honeypot and people are after it, you know. And nothing's unhackable, but you frustrate hackers by frustrating them. You know, it's possible to get it at some point, but if you have to expend $6 billion worth of effort to get $400 million worth of assets, they'll rather go and find the person and put a password.
Right. Yeah, I remember hearing that in one of your videos. You said if it was made, then it can be broken. Right. Essentially.
Yeah, the unhackable thing, I don't believe. That's like being unbuildable. So
right.
Break it down.
Exactly. If your mind can conceive it, it can achieve it, and somebody else can reverse engineer it.
Yeah, most likely got standing right behind you right now.
Right. Looking over your shoulder.
But when you use Coinbase, you relinquish control of your assets. You know, and like I said, I'm not knocking Coinbase, I'm just being honest. They're very well run. I think the security is very tight, you know, and we haven't heard of them being hacked. I'm pretty sure they have, because everybody's been hacked. Right. You know, anybody who says they haven't been hacked doesn't realize they've been hacked. It's really just that simple, you know. But again, centralized honeypots are the antithesis of the autonomous nature of cryptocurrency. For instance, I'm very bullish on Ethereum as a concept. When they first announced it, I was there in Miami in 2014, and I was new to Bitcoin at the time, even though I already started my own venture. And reading up on it before they even launched a token, I'm like, that was very ambitious, very risky. And I wasn't doubtful, it's just that, you know, the risk is very high, the chance of them pulling it off was very high. I mean, the chance of pulling it off was very low. But the potential reward was very high. Lo and behold, 15 to 18 months later, they did it. Ethereum is, you know, a good piece of kit. Now, the price did go down. It went down a lot. Why do you think it went down? Why do you think it would go down?
It was oversold. Overbought. It was people were believing the hype, and that was, I believe in Ethereum as well. I think it's an amazing tool that is bringing a lot more builders into the space and building out the capability. It's an infrastructure. It's like you know, it's a bridge essentially. You know, you have these two big bodies of land divided by water, and Ethereum essentially can build a bridge from one side to the other. I think given the space it's been through in the past month, at the time it was just too many people throwing the money in before that bridge was built. You know, and essentially it started to fall down from the inside out. So that's what I read in the charts, is just seeing kind of essentially where the momentum's coming and when it's gone. And about a month ago or so, Ethereum ran out of steam. I think essentially it experienced its first bubble, people call it, to where it's real excited for a minute. CNBC puts their article out, you know, Business Insider puts their article out, and next thing you know, the thing is down 40%. That's when you know it's time to get out.
I've learned my lesson.
You know?
When the big media companies come in,
it's time to get out. Nobody else gonna buy it.
And if it's your asset, you're stuck in it. You enjoy the accolades, right, but like look out below.
So I think it's amazing. It's gonna completely transform what we're able to do in crypto space. I think what we just experienced in the past month or two, ever since probably $150 has been the excitement, the oversell, and now an imminent descend until we hit the ground again and we can go back up. And when I look at the charts, I look at Ethereum. I told people to sell Ethereum at $360. It was underwater. It was going down, and it has since gone lower. It's going to continue to go lower in the near future, price-wise, as compared to the US dollar. But then when I look at your chart compared to Ethereum, it's pretty much skyrocketed in that same time. And when people go from looking at investing in an ICO versus trading coins versus buying a tool for the future, where do you see that transition in crypto really takes off and overcomes, the industrialized process that we have now? What do you predict Bitcoin will be? What's kind of like next year or 5 years from now? What's the moon look like for BTC?
See, it's dangerous. Bitcoin has big bullish attributes and big bearish attributes. New money comes in. When new money comes in, it goes to Bitcoin first. Why? Because it's what all new money knows. Right? But Bitcoin has significant governance issues. You have factions fighting to implement technology advances that are needed. The network is straining, right? And new technology is needed. But this technology is there. Not only is it there, there's like 6, 7 different versions of it. 3 or 4 of these versions actually work. So how comes that implemented? Because you have faction fighting. This faction benefits if that one is implemented, the other one benefits more, if this one benefited, a third benefits more, the tertiary one, etc. What they all seem to be failing to realize is they all lose if A, they don't implement it, or B, they take too long to implement it. And this is one thing that people just don't get with Bitcoin. Bitcoin is in a foot race with its competitors. Bitcoin has a vastly superior version of it that competes with it. That's called Dash. Dash is actually a fork of Bitcoin. They forked the actual Bitcoin code and they fixed every problem with it. Okay? Even the governance issue. Dash is governed by smart contract. And true voting. And Dash is good. I met the CEO, I interviewed him. Look on my YouTube channel. He's a grown-up. And grown-ups, believe it or not, sort of hard to come by in the industry. And he's smart. He knows his stuff. He knew the risk return and the kurtosis and skew ratios in finance, financial engineering. Most likely because he's an engineer, sharp at math. And he's not the only one. He's the CEO of the development arm of Dash, not CEO of Dash itself. I like the way they run. We actually have a research report on them that I haven't had a chance to finish because I'm trying to make money. But when entities like that come up, Bitcoin has to realize they're in a foot race. They're in a foot race with Ethereum. A lot of people say they're different. They are different, but they're still in a race with Ethereum. Ethereum could do everything that Bitcoin can, right? What Ethereum doesn't have is the network effect, which it's catching up with, and it doesn't have the media attention, which it's catching up with. And Ethereum's in a foot race. Ethereum's a platform and it's powerful. There's an application written on top of Ethereum that is called Veritaseum, and it enables amazing things to happen. Amazing things, and hopefully I'll get everybody to realize it once I don't have the need to be so super secretive. All the NDAs are now expired. But we're working hard and we're working on big things. We're doing small deals with like individual doctors' offices. We're doing big deals with the most powerful institutions in the world. And every time we run into a roadblock, and the roadblocks are interesting. One of the biggest attributes of blockchain technology to me was basically to lower or eliminate the power of the old boys network. Okay? And then I found that the new boys are acting just like the old boys did in exclusionary behavior. It's good because it shows me, bottlenecks. And these bottlenecks are to be removed. You don't remove them by force, you build bridges around them. The economic rent thing. That person who built that, who bought that strip of land in front of the burning door, I'm going to build a bridge over that land. Okay, now own whatever land you want. Go over it.
That's interesting. You mentioned Dash 2. That was one of the first videos I saw where Dash actually had been suppressed, broke out right around Memorial Day. I made a video called Dash is Cash, and you know, since then it's almost doubled. So, you know, looking at that, one of the things I did after that was I compared it. I lined it up on Bitcoin, and you can kind of see almost like a 1-to-1 when Bitcoin goes down, Dash goes up. So do you think like the market kind of subconsciously already sees the value proposition? And you know,
it's hard to know because I'm not sure there's enough true market forces in there. Because programmers are by far the largest constituency of crypto, you have a lot of programmatic players in. So what a lot of people identify as a market or a bunch of algorithms that these guys wrote scripts. Right, they going out. Most of the algos are momo chasers.
I think we're smarter than
and humans who can do fundamental analysis, they are smart.
They are.
But so many of them. If you count the amount of traders, 43 humans and about 400 algos. So you know you cannot. It's not about outsmarting them. Algos are predictable. They're pattern driven. Okay. Fundamental analysis, there's some pattern into it, but you know it's figuring things out. Like, you know, I look at certain CEOs and they're talking and I know I can't put my finger on it, but I know for a fact he's lying. Okay, he's lying. Right? I don't need the algo, he's lying. You see his nose blowing as he speaks. You know, algos can't do that yet. So humans are better than algos as long as it's not a pure calculation and pattern recognition.